Hi guys! Welcome to Tax Q&A, your go-to resource for all things tax-related. Whether you're an individual looking to understand your tax obligations or a business owner trying to navigate the complexities of the tax world, we're here to help. In each video, we break down tax topics into easy-to-understand explanations, offering practical tips and expert insights. Subscribe and hit the notification bell so you never miss an episode. Let's dive into today's tax question. Filing status. Taxes can be confusing. It's important to understand the basics. One of those basics is your filing status. Your filing status determines your tax liability. It also affects your eligibility for deductions. The IRS offers various filing statuses. Choosing the right one can save you money. We'll break down each status. Then you can confidently file your taxes. The single filing status is straightforward. It applies to individuals who are unmarried. It also applies to those legally separated or divorced by the year's end. If you don't qualify for other statuses, you file as single. This status has a specific standard deduction. For the year 2025, it's $15,000. This deduction reduces your taxable income. However, other statuses might offer better benefits. If you're unsure, consult a tax professional. They can help determine if single is right for you. Married filing jointly is for couples. You and your spouse must be legally married on December 31st. This status often results in lower taxes. You combine your incomes and deductions. This can lower your overall tax liability. The standard deduction is higher too. In the year 2025, it's $30,000. This can lead to significant savings. However, there are situations where filing separately might be better. For instance, if one spouse has high medical expenses, separate filings might be advantageous. It's essential to analyze both options. Choose the one that benefits you most. Married filing separately is an option. It allows spouses to file separate returns. Each spouse reports their income and deductions individually. This is beneficial in specific situations. For example, if one spouse has significant medical expenses, filing separately might lead to lower taxes. It can also be helpful if one spouse has fluctuating income. However, it's crucial to remember that filing separately can have drawbacks. It can result in a higher overall tax burden. It also makes you ineligible for certain deductions and credits. Consult a tax professional to determine the best approach. Head of household supporting your family. This section is crucial for understanding how you can leverage your tax status to benefit your family financially. The head of household status offers tax advantages that can significantly ease your financial burden. By filing as head of household, you may be eligible for a higher standard deduction and lower tax rates compared to filing as single. This status is specifically designed for unmarried individuals who are supporting a qualifying child or relative. Whether you're a single parent raising children or taking care of an elderly family member, this status can provide substantial tax relief. To qualify for head of household, you must meet specific criteria set by the IRS. These criteria ensure that the benefits go to those who genuinely need them. It's important to understand these requirements to make sure you qualify. One of the key requirements is that you must pay more than half the costs of keeping up a home for the year. This includes expenses like rent, mortgage, utilities, and groceries. Essentially, you need to be the primary financial provider for your household. Additionally, a qualifying child or relative must live with you for more than half the year. This ensures that the tax benefits are directed towards those who are genuinely providing a home for their dependents. There are exceptions to these rules, such as temporary absences for school, vacation, or medical care. It's important to consult the IRS guidelines or a tax advisor to understand these exceptions fully. One of the most significant benefits of the head of household status is the larger standard deduction. This can reduce your taxable income, leading to lower taxes owed. For the tax year 2025, the standard deduction for head of household is $22,500. This is a substantial increase compared to the standard deduction for single filers. This larger deduction can result in significant tax savings, allowing you to keep more of your hard-earned money. These savings can be used to support your family in various ways, from daily expenses to future investments. If you think you might qualify for head of household status, it's worth exploring this option further. Consult with a tax advisor or use IRS resources to ensure you meet all the necessary criteria. Filing as head of household can be highly beneficial for single parents or those caring for dependents. It not only provides financial relief, but also acknowledges the significant role you play in supporting your family. The qualifying surviving spouse, also known as widow or widower, navigating loss and taxes. Losing a spouse is one of the most challenging experiences anyone can go through. The emotional toll is immense, and the practicalities of life can feel overwhelming. During such a difficult time, the IRS offers support to help ease some of the financial burdens. One of the ways they do this is through the qualifying widow or widower status. The qualifying surviving spouse or status provides significant tax benefits, which can be a crucial lifeline for those navigating the aftermath of loss. This status is specifically designed for surviving spouses who have a dependent child, ensuring that families receive the support they need during this transition. You can use the qualifying surviving spouse status for up to 2 years following your spouse's death, providing a buffer period to adjust and plan for the future. To qualify for this status, there are specific conditions that must be met. It's important to understand these requirements to ensure you can take full advantage of the benefits. One key condition is that your spouse must have passed away within the 2 tax years preceding the current year. This time frame is crucial for eligibility. Additionally, you must not have remarried during this period. This ensures that the benefits are directed to those who are still single and managing a household on their own. The qualifying surviving spouse status allows you to use the same tax rates as those who file as married filing jointly, which can result in lower taxes compared to filing as a single individual. Another significant benefit is the higher standard deduction. This can substantially reduce your taxable income, providing more financial relief. For the tax year 2025, the standard deduction for qualifying surviving spouse status is $30,000, which is a considerable amount. These benefits can provide much-needed financial relief during a challenging time, helping you to focus on healing and rebuilding your life. Understanding and utilizing the qualifying surviving spouse status can help you plan your taxes more effectively, ensuring you receive the support you need during this difficult period. Surviving spouse scenarios, with and without dependents. Filing as a qualifying surviving spouse. This status applies only if you have a dependent child. Here's what you need to meet. Eligibility criteria: spouse's death. Your spouse must have passed away in the previous 2 tax years. Example, if your spouse passed in 2023, you could file as a qualifying surviving spouse for 2024 and 2025. Dependent child. You must have a dependent child who lived with you for more than half of the year. The child must qualify as your dependent under IRS rules, for example, biological adopted stepchild or foster child. No remarriage. You must not have remarried before the end of the tax year. Household support. You must pay more than half the cost of maintaining the home where you and your dependent child live. This offers favorable tax rates and a higher standard deduction, which can provide significant financial relief during a challenging time. It's a way to ensure that you and your dependents are supported as you navigate this new chapter in your life. Benefits. You use the same tax brackets as married filing jointly, which typically have lower tax rates compared to other filing statuses. You can claim the full standard deduction for married filing jointly, for example, $30,000 for 2025. Filing as single, no dependents. If you do not have a dependent child or no longer meet the above criteria, in the year of your spouse's death, you can still file as married filing jointly. For subsequent years, if you have no dependents, you must file as single. Single filers have a smaller standard deduction and different tax brackets compared to married filing jointly or head of household. Head of household alternative. If you have a qualifying dependent but do not meet the surviving spouse criteria, you may qualify for head of household status. It offers better tax benefits than single, but is less advantageous than qualifying surviving spouse. Key considerations. Keep records of your spouse's death certificate, proof of dependent eligibility, and evidence of household expenses. consult a professional. If you're unsure about your status, consulting a tax professional can help maximize your benefits. Understanding these scenarios is crucial. Each filing status has its own set of rules and benefits, and choosing the right one can make a significant difference in your tax return. It allows you to choose the most beneficial filing status. Taking the time to review your options and understand the implications can lead to better financial outcomes. If you're unsure, seek guidance from a tax professional. They can provide personalized advice based on your unique situation and help you make informed decisions. They can help you navigate this difficult time, ensuring that you take advantage of all available tax benefits and avoid potential pitfalls. Remember, you don't have to go through this alone. Professional help is available to support you every step of the way. Understanding your filing status is the foundation of your tax return. But did you know it also determines your eligibility for some key tax credits? For example, single filers can benefit from credits like the Earned Income Tax Credit if they meet income requirements, while married filing jointly provides access to the highest standard deduction and can maximize credits like the Child Tax Credit. On the other hand, head of household filers enjoy a larger standard deduction and may qualify for credits like the Child and Dependent Care Credit. And while married filing separately limits some credits, it might still be a smart choice for those with specific financial circumstances. Choosing the right status not only simplifies your taxes, but ensures you take full advantage of the credits and deductions you deserve. Conclusion: making informed decisions for your tax situation. Choosing the correct filing status is essential. It affects your tax liability and eligibility for benefits. We've explored the different statuses. Use this information to make informed decisions. Remember, tax laws are complex. It's important to remember that your tax professional is more than just someone who files your taxes. They're a valuable partner in your financial journey. Make it a habit to ask questions about your tax obligations, potential deductions, and future planning strategies. Whether you're unsure about a recent change in tax laws or want to explore ways to save on your taxes, open communication is key. Don't hesitate to reach out and discuss your concerns or goals with your tax professional. A proactive approach not only helps you stay compliant with IRS guidelines, but also allows you to make informed decisions that can positively impact your financial future. Your tax professional is there to guide you. Make the most of that relationship. They can provide personalized advice. If you found this video helpful, share it with others who might benefit. And as always, consult a tax professional for personalized advice. By making informed choices, you can optimize your tax situation and achieve financial peace of mind. Thanks for watching, and please share your views with us. If you have a tax question you would like that to be answered, please post your question in the comment section below. Stay informed, stay prepared, and let's make taxes less taxing together. See you in the next video.